Hello, everybody. My name is Tuna, and my experience is the lively world we live in. We're going to talk about real estate. We're going to talk about finance, credit cards, banking.
Property management of Airbnbs.
Yeah, wasting money on stuff that you shouldn't buy.
That's the other part, which is improving properties.
Oh, yeah, I love wasting money there. What else?
Okay. So we'll try to do the channel and talk about those three things because that's our main business. It's buying. Well, first of all, it's getting knowledge of what is it that we're doing, which that takes a lot of hours. Then it's buying, then remodeling, and then the part of renting, which is the fun part because we start getting a little bit of money from that.
Yeah, cash flow. Cash flow is king.
Then right here, my husband was saying that he's a doomer, and he's thinking
I'm
that
not too much of a doomer. I'm just, doomish.
he's saying that there's something very important happening right now with the banking system.
Banking liquidity. Yeah.
Okay, so when do you think that? First of all, what is it that's happening?
Well, they're starting to use the principal payments from MBS, mortgage-backed securities, to buy more treasuries and new forms of MBS. So basically what they're going to start doing is they're going to stop selling these assets and they're going to start buying it, which is going to prop up the economy, so they think.
Okay, when do you think that this started? When did you actually have a feeling of something's changing in the market?
Well, we just tried to get a new mortgage, and the bank just told us to pound sand. They grabbed our income, which is net, traditional, and they basically made it negative. All because they changed the way that they view debt. They changed the way that they view income. And I want to say it started recently because we purchased the property like 3 months ago and none of that happened then.
And we also just cashed out refinance.
Yeah.
And
none of that happened either.
Yeah. So it's like very recent. Actually, only 2 or 3 days ago when we actually started thinking about purchasing another property.
Right. Which the FOMC, the Federal Open Market Committee, went all poopy doopy about a week or two when they did their meeting, and that's probably around the time it started, maybe a little bit before that, but I'm starting to see clear signs now that I'm actively trying to like grab more loans and buy more property, and we just can't. And we have good income. We have many years in business. We've been in business now for 8 years. We got 10 rentals. They're all Airbnbs.
Actually still happening. If you're wondering why is it that we're walking, is because it looks cool. But go back to whatever you were saying.
Well, we were talking about getting new loans. We were talking about buying properties, and they are just making it harder. They're requiring more down payment. They're deleting your income, basically. They're adding new steps, extra doors to open, more flags to pull.
What is it that you think that one should do in this case? Is it good to be waiting? Are we expecting anything different? What is the government saying about this?
The government ain't gonna tell you nothing.
Nothing.
But what you could do right now, pay some debt off. If you got high interest debt, pay that off. Save some money. Probably now. I always like to buy. I always say now is the best time to buy. But if you can't buy, there's nothing bad than to wait.
What do you think is gonna get most affected in this case? You think that this type of issue is only going to affect business owners because of how they get their money, or is it going to affect W-2 jobs? Is it gonna affect millionaires? I don't think so. They never get affected because they have all the money.
Well, yeah, millionaires have something to lose, right? But I would say everybody will be affected, especially those who borrow money for a living, which is a business strategy. Those who are in the employment side, if you're not close to revenue, you could probably be laid off easier. If you're in the lines of already starting a project, you have a HELOC that's already in place, and you want to do your remodel, your purchase, however you want to do it in tranches. That way you don't just take out all of the money and then you're paying based on what you take. If it gets any worse, your line could freeze up and then you won't be able to take anything out. So you could take it all out at once and do your investment that way. Or you could wait.
Yeah, just be mindful of what's going on.
Of course.
Always research, because I guess in other states it can be different. I mean, although if it's federal.
Yeah, like point it over there. It's just nothing but cranes. And this is West Palm.
Palm Beach, right?
Yeah, that's West Palm over there.
Yeah, it's always gonna depend on each particular situation.
Yeah, you cross the 95, which is our major highway, and everything's going down in value. But you come this way towards the island and towards the downtown, and everything's booming. Everybody's building, everybody is hiring, and it's great. But that's what the K-shaped recovery, like they call it. The rich are getting richer and the poor are getting poorer.
Happier.
Yeah, happier.
You want to say something? You want to say bye?
Well, yeah, I would love to say please subscribe, thumbs up, comment, anything that we could talk about. I'd love to talk about it.
Of course, and if you need help from us from anything on how to analyze a property, how to get a mortgage, any of that stuff, you can also ask us and we will help you.
Right. We're not licensed, so this is not financial advice. This is just a couple walking on the sidewalk.
Disclaimer.
Disclaimer.
I'll put a disclaimer at the end.
Yeah, don't sue us, bro.
Okay, deuces.
Laters.
Anyways, you guys have been a lot of fun. Thank you for coming to the show tonight. Have a great evening.
4, 5, 6, and another one right here. 7. Welcome to Florida.